the sound quality is good, give us a thumbs up so we know and we can continue. Andrew, how you doing, man?
I'm doing well, thank you so much. I had a really nice trading day, happy with my trading day, and excited to see what the market is doing and talk to one of my favorite people in the trading community, Dr. Kenneth Reid.
Yeah, definitely. We got a special guest. So when we started this show about like maybe 3 weeks ago, my goal was to really make this show a powerhouse. So from amazing content to amazing guests. So last week we had we had Jason, who's been trading with us for a little while, and he came on the show, shared his story. This week, today, we have Dr. Kenneth Reid. He's gonna talk about, like, he's seen 4 bear market, was it, Andrew?
This is his 4th bear market.
Yeah.
I think he saw that from the dot-com bubble,
yeah,
and then 2008, 2009, and then pandemic bear market, and this bear market is the 4th that he's trading.
Wow.
I traded only 2.
That's pretty impressive. So Dr. Kenneth Reid is coming in. He's made a really nice presentation. He's going to talk about what it takes, to be consistent during these up and down psychologically. But also he's going to talk a little bit about technical analysis and pattern reading. So it's going to be very interesting. We got a packed show today. So the first 30 minutes, we're going to talk about the market. We're going to digest the CPI numbers. What did it mean? We're going to talk about tomorrow's Fed meeting and the rate hike. What is priced in, what is not priced in, how the market is going to react, and tons of stuff. Very amazing guest. And in about 25 to 30 minutes, we'll have Dr. Reid on as well. So it will be an awesome show. Definitely, give us a thumbs up and stay on. We got a packed show. Let's start with you, Andrew. How was your trading today? What did you trade? What did you see in the market? Let's go into your screen and see what's going on.
Yeah, so today for me was trading usual suspects. And when I'm saying usual suspects, when you are in the very volatile market, right now in a bear market, the market volatility is enough for you that you don't have to beg looking for a stock in play and the volatility and volume. Just my market by itself is really volatile. And obviously my usual suspects are technology sector. The QQQ is composing of 100 companies in NASDAQ. That sector is really volatile. The usual suspects, Apple, AMD, NVIDIA, Tesla, these are all the companies who are part of QQQ, and the volatility is really nice. So that's why when I'm saying the usual suspects is I just don't need to look for a stock in play. These are going to be in play because we are in an extreme market volatility. So obviously, as I mentioned, QQQ is one of the very volatile sector indexes, and down to 276. And you can trade indexes a couple of ways. Options trading on indexes are really nice. Or you can trade them directly by QQQ or sell, or you can trade the leverage products of those like TQQ or SQQQ. So today I traded SQQQ, which is the shorts of indexes, SQQ.
I've never seen you trade SQQ.
That's the first time that I'm trading it. And I'm telling you why. Because usually TQQ, because the market overall goes up, therefore there are more interest in trading it on TQQ. But now that the market constantly going down, the volume and volatility on SQQQ is also really good as TQQ. So now this was the first day that I actually started trading SQQQ, and I could get this breakout on SQQ all the way up from red to green. You could potentially trade TQQ as well on a short side if you can have shares. Usually you can get some shares for short on TQQ as well. But that was the first time because I really like the volume every minute, almost half a million volumes going there, and I really like the order flow on that as well. So that was my trade that I went long. So that was essentially the short of the market by going long SQQQ. And it turned out to be really nice. And Tesla was another one that would turn out to be a 5-minute open range breakdown for me that I went short around here for the green to red, and we got really nice drop on that. That was a perfect 5-minute open range breakdown if you look into that. So you sold off, lose the VWAP, a little bit of doji, and then you can get this leg down.
Yeah, that definitely was. I'm pretty sure that's one of Ed's favorite strategies.
Yeah.
That's pretty amazing. So we were talking about, obviously yesterday was a brutal day, and today I posted something. Let me bring the trading terminal. I talked about turnaround Tuesday, right? Like when we have Mondays that are so bloody and everything's red, usually Tuesday are positive. And it was positive for earlier in the day, and then it sold off again. Now it's making an aim back to become positive again. So, looking at my screen, you can see that the index is like Q's just went green, S&P's trying to go green. So it'll be quite interesting to see if we can finish green today. A couple of really interesting stuff to talk about, Andrew, is the 10-year now at 3.5. So that's a good yield.
That's an amazing. I remember like 6 months ago it was less than 2, and now it's at 3.5%. That means that you can park your money, get for 10 years you're guaranteed 3.5% return. Is that correct, Ardi?
That's absolutely correct. Yeah. So I mean, that's why we're seeing a lot of the real estate, like we were talking about cap rates earlier today before going live. You know, some of the real estate properties are giving you cap rate of 2%, 2.5%. Well, you can just put your money technically risk-free and get 3.5%. That a lot of the real estate deals are now all of a sudden have a big question mark on them. So that was one of the things I've been looking at, this 10-year. How much can it continue? Last night I was in the office. I tweeted about this till almost 10 p.m. I was running a regression, Andrew, and I was regressing the 10-year with the earning per share estimate to figure out what the price of S&P should be, SPY should be. And I did some analysis, and I'm going to share them. I shared them today with the chat. Everyone loved it, so I thought maybe I'll bring it to the live, and we'll talk about some price target and bottoms, because everyone's talking about, hey, market is selling off, where is the bottom? And of course we have the technical levels, but you know, looking at earnings is a really good window as well to see what's going on in the market.
So the price of the market is really determined by that earning per share estimates, and also the interest rate. Interest rate defines the value of the money that, you know, and the growth that you're getting it in the future. That's why you always discount it back.
Yeah, definitely. We by the way, we got about 105 people in the live.
Yeah, well, thank you so much, guys. Appreciate that. We appreciate the thumbs up to our channel, to video. So, you know, YouTube, recommended it to more people if they're interested to learn. So we really, really appreciate that thumbs up. It means a lot for us.
Yeah. So let's start with inflation. Of course, Friday, the inflation number came out. We didn't have a live show on Friday, so today is the first live show. Inflation hit a 40-year high. CPI core at 8.6, so it's pretty high. So you can look, this is your CPI, and then this is your core CPI, which is the core CPI excluding energy and food is kind of trending downward, which is good. But overall, the headline CPI is still very high. And, you know, we're in election years, and as much as we like to, you know, not talk about politics, but they're very intertwined and connected when it comes to markets. So this is one of the things that, you know, Fed has to get to the control. It's probably under a lot of pressure on an election year, is that headline CPI. Some of it is energy, right? There's nothing Fed could do unless they make you so broke that don't want to fill up your tank.
Yeah, there is definitely, you know, they can control the demand aspect. They can't really control on the supply side. But there is one thing that is very important about this CPI number, that there is a concern that this can become unanchored inflation. It means that it just randomly pops up in these different industries and it's not really following a trend. And that's why the market really, really, scared about this number. That, you know, everyone was expecting, you know, by increasing the interest rate, the demand come down, and then as the supply, bottlenecks are easing up, the supply increases. But that turned out to be no. It's really not. It's really unanchored. You know, the industries that go through the cycles of increasing the prices, like what happens into the retail. You know, airline and hotel industries are increasing the prices now, and it's just that's a very scary thing when you have an inflation that is completely out of control.
Yeah, no, absolutely. I mean, this chart on my screen is also a really good estimate of, you can see the headline is continuing to go up. It hasn't peaked, but the core seems like it's peaked in March. So the core is coming down. But, you know, of course, food prices are really volatile. Energy prices are really volatile. Unfortunately, the Ukraine and Russia war has something to do with that. So, you know, that's not really helping. And I don't think this is going away anytime soon. You know, when we're talking about Fed's probability of rating and like what is priced in and what is not priced in, let me bring this next slide. You know, we were talking about 50 basis, but right now 92% of traders are pricing in a 75 basis increase tomorrow.
92%.
92%.
Wow.
So they're almost saying, hey, this is a done deal. Forget the 50 basis point Powell told us last month. He's going to increase the rate by 75 basis points. And here's what I believe. I think if he goes 50 basis point, the market will sell off because the market will be disappointed. They care more about getting inflation under control than the interest rate. So I think if the event is 75 basis point, then he should probably do that, and he should pay attention to this data. You might not agree with me.
No. Everything is possible. Nobody really knows that. J-Power doesn't really like to surprise the market, but it seems that the market has already priced in a 75 basis point. Even some people are really betting on 1% increase.
Yeah.
Not for this one, but definitely for the next ones. And one thing that J-Power was really clear was that they do everything to control inflation. So they have no mercy toward stock market yet. Until the inflation goes into the right direction. Yeah, it's very possible. It's very, very, very possible that we can see 75% tomorrow.
Yeah, 75
basis point.
Yeah. And this is, by the way, if they do that, it's going to be the largest one-time interest rate increase since 1990.
Yeah, so, this is one of the most aggressive rate cycles that they have, and this is going to be really, really impactful for the market.
And we've been talking about this for a few months now in the chat room. If you're not part of our chat room, this is one of the things you're missing out, because inside the chat room we've been talking about aggressive rate hikes. That's something the market don't like. Usual rate hikes, market usually sells off prior, and then once the rate hikes start, market will rally. But aggressive rate hike, we call it fast tightening cycles. So the financial conditions getting tighter, but really fast as well. These are the stuff that market don't like. That means lack of liquidity. That means higher borrowing costs. That means layoffs, lower margins, all of that stuff. It's like a domino effect. So it would be really interesting. Tomorrow is going to be a massive day at 2 o'clock. Set your times. If you're trading, be very careful. The volatility is going to be very, very crazy, and especially at 2:30 when Powell comes in and he's going to give his statement and answering those questions. He has to be very careful treading the needles. I don't even know what market wants out of him, right? Some of this stuff is out of his control.
I personally never really traded any of these big events, and I have been consistent trading the market. You can really stay away from this volatility because sometimes you really read the direction completely wrong. It goes down, you think it's a short, but it really squeezes back. You can stay away from it, and if you really want to trade just for the sake of fun of it, trade very, very small share size. The volatility can make up for the smaller share size that you're taking. But we're really careful.
I mean, you can trade big size and make big money, but remember, it's not because of your edge. It's you're pretty much gambling, right? At that point, right? And we've talked about that. Yeah, I could, bet and say, oh, the market's gonna go up, so buy some out of the money calls, and boom, look how much money I made. But there's no edge in that, right? It's just pure gambling, and that's the last thing we wanna talk about. But we talked about, Andrew, we talked about, okay, where is the bottom in the market? I mean, of course, there's key levels you can take a look at SPY and SPX and say, okay, this could be a bottom. But I saw something really interesting on Twitter, and then which kind of inspired me to run my own model that I want to talk about. And I think viewers will get a lot of value out of it. So, these regression models, you got a couple of variables and you regress in the models, right? This looks at basically the BBB corporate credit yield plus equity dividend yield. So this is kind of your cost of capital in the equity market. That's a good proxy for cost of capital. And then it gets the earning per share estimate, divide that by this number, and get a price. So you can see this model was basically telling you in the dot-com bubble that, hey, the market is overvalued. And during the 2010 to 2016 run, it was telling you that the market is undervalued. And you can see the deviation is very, very low. So this is a really good high accuracy model. We call it the high R-squared model, right, in statistics. This is a good model. And basically currently with this rates being at around 5.25 and earning per shares, the estimate is 227, you got 3,200, 3,300. These prices are not out of the window. So when we talk about SPY of 340, 350, it's not far-fetched, right? Because rates are going up so fast, and that means cost of equity cost of borrowing is going higher. So I wanted to share this, and then last night I spent some time running my own regression, and this was the result I came out with. Right over here. So, looking at the earning estimates and regressing it on the 10-year, and basically this is where I think is the high probability of where the SPY is gonna land. Somewhere from 390 to 480 in the best case scenario. You know, depending on if we can keep the earning estimate high or no, if we go into a recession, earning estimate falls and the rates has to go up. So this is kind of your worst case scenario, your stagflation. You're in a recession and high inflation, so 375. So I'm gonna send this out, by the way, in my newsletter with my thinking and stuff. So if you haven't logged in, if you're not a part of it, definitely sign up. It's absolutely free. But you know, we focus a lot on technicals, and you know, fundamental also plays a role. And I think it's good to have the both, again, tools in the toolbox, both of these knowledge out there.
So another thing that I read actually during the my Bloomberg reading that I had was that the profit margin of corporations have gone up significantly in the last 2 years after the post-pandemic. And now this pullback is actually, the whole slowing down the economy and raising interest rates, it's going to slow down the earning per share of the S&P 500. And that, I'm actually posting it right now in my Twitter, that causes that this number comes down. The profit margin of the corporations are going to come into around the 10-11% instead of 14%, which is the back to the mean and the regression that I had. So yeah, that's, I'm going to actually, you can show my screen. So I'm going to post this in my Twitter channel right now. This is what essentially is happening. You know, from 1994, the operating and reported profit margin of the corporations has gone up significantly. It means that corporations are getting richer and richer. But there is essentially a mean, a linear path that is going to go up. After the pandemic, as you see, the reported and operating profit margin of S&P 500 went as high as 14%. And now, even if we come back because of these higher interest rates, we are still into the path to go back into the mean in the operating of profit margin of the companies.
Yeah, this regression to the mean is such a beautiful thing. So you can't escape from it, right? Like
it's everywhere, even if it's in life. You get too high, the life puts you back, and you know, it's just you know, you always don't forget that you always go back into the mean.
You know, we talk about business cycle. I say everything goes through cycle, even life. So very interesting. Tomorrow we're gonna have one of our members who is Jeremy. He's been consistent for about 4 months now. He want to share his story, and I'm so excited to have him on board. But he was telling me, you know, about, you know, sometimes he loses, and I told him, hey, sometimes yes, you lose money, but that's not because your strategy is not working. It's just variance, right? You have these variances. Like you can have a coin flip, coin toss, and get, let's say, 5 heads in a row. That doesn't mean head has an advantage over tail. That doesn't mean that. It's just simply variance. So same thing in trading, you know, same thing in everything. Like you're gonna have these mean reversions, you're gonna have this type of variance. All you need to do is have the psychology to really separate your results from your self-worth or from your system or whatever it is. Once you do that, a little bit of foreshadowing into what Dr. Reid's going to talk about,
definitely.
By the way. Once you do that, that's when the result comes in, and that's when everything starts to click. So that's why we're doing the show. That's why we're basically running BBT the way we're doing.
By the way, Dr. Reid is actually in the chat, so he said hi. So if any one of you have any question, you can start, you know, putting your questions and start chatting with Dr. Reid until he comes in about 6 minutes in.
Yeah, we're gonna have Dr. Reid added to the show in about 6 minutes. By the way, Dr. Reid, if you're listening, you're breaking records right now. We have 142 people live watching this, and this is just live right now. A lot of people are gonna rewatch it at a later date. So this is one of our most viewed shows so far. So kudos to you and thank you. We're just hearing a little bit of echo, and our producer is working on giving us that AirPod so we don't hear the echo, and hopefully that will be fixed before Dr. Reid comes in on the show as well. Let's take a look at the questions. Any things? I am Chris is saying he's probably not gonna trade during the Fed's meeting. That's a pretty good idea. Ron is saying he's probably going to sit and watch tomorrow. A great idea. Delta Day Trader, he's saying, is there any plan to have more Twitter Spaces? Man, first of all, you know, thank you for tuning in. We're planning on it. We want to be a little bit more structured for our Twitter Spaces. We want to have guests on, and I think previously it was just a little chaotic. So we will improve that. Right, Andrew? We'll probably have a schedule and have guests on.
Yeah, for sure. We are planning to bring a lot of important guests, a lot of them from the community and from the people who work directly with community, like Dr. Reid. And also, we are reaching out to known people to go over the market and trading, and hopefully we can grow that. But that's why the support of everyone who comes for the show is really, really important for us. Give Dr. Reid a thumbs up because he's going to join us really soon. And I think we should not have any problem hearing or listening to him. But, if there is any technical issue, just be patient with us until we make sure that it's working perfectly.
Yeah, definitely. Santiago, make sure just Dr. Reid has access to the password for the show as well. And then that should be all good. Andrew, before I do that, while Santiago is figuring that out, I just want to spend a little bit more time on the model, and then I want to talk about Twitter, something I said on Twitter, and then we'll call it a day, and we'll bring Dr. Reid on. So I gave a probability weighting based on that model that I showed. So I said 65% probability for the bear case, which is the recession in my case. So that way my price target based on the model was 350, and then base and bull case. So did a weighted average of probability, and this is what I'm seeing currently with the earnings that we're having. I think at 390 would be a good price target for the year end if we can keep up at around 200 per share on SPX earning per shares. But let's see. Again, these models have full of errors, right, and variance.
Yeah, everything is easy when you look at it in the past or model it in the past, but in real time, it's completely different. So SPY is down almost 0.5%, IWM 0.5%. Qs are kind of holding near flat, so we are pretty much done with the day. We didn't get a really huge sell-off leg down, but we are just holding about the lows until probably everyone is waiting until tomorrow to see what's going to happen tomorrow.
Yeah, what today showed me is that no one has the stomach to hold anything going into tomorrow. So that just shows how much tension there is tomorrow. This is the first Fed's meeting that I've experienced in my trading career that we have no idea what the Fed's going to do, right? Like we knew, like when I looked at the probability chart, it was a lock 50 basis point until last week. And once the numbers came out on Monday, especially when the market was selling off, all of a sudden the probability went from like 70% 50 basis point to 90% 75 basis point. So I've closed all my positions. The only thing I have is some 350 SPY puts that I've sold for end of the month. Again, based on my price target, that's where I want to get in. But that's about it. Last thing before we got a couple of minutes before Dr. Reid can come in, is this tweet. Coinbase is laying off 18% of their staff, and somebody tweeted with the news, and I talked about this and we had a chat. I said for years we all thought that Wall Street is so out of touch with reality, and I think in the last 10 years, these free money and free rates have made Silicon Valley so out of touch that their valuations and money losing companies. Of course, we're definitely seeing whenever people lose their job. But in a sense, I'm kind of happy that valuations is starting to matter again. Like solid business model are starting to matter again. Of course, as traders, it's amazing for us because that means more volatility. But it's kind of a paradigm shift from Wall Street. Yeah, when we talk about a crash of 2008, we all blame Wall Street. When we're thinking about the crash of 2022, we're mostly blaming tech and Silicon Valley, and it's a really interesting shift in terms of diagram, right?
100%. Yeah, the time for the easy money has gone. Even all the venture capitals into the tech industry, they're telling that they cannot really count on the future round of investments, even if they have been promised to. So obviously the free money, it's getting more and more difficult to get. That's so important that for the companies to now become positive cash flow and maintain their cash flow. A lot of these companies are going to go on there. You see a lot of these companies, even they're trading in NASDAQ, they're going to go really lower and lower and lower until they get delisted from the exchange. So, yeah, so Mile is one of them, one of the very perfect ones that we're right now is trading at 86 cents. So Mile is one of our friends who got in there like around $9-10. It was a hype of last summer. It was just everything was going up, and then he had about $90,000 in there, and he said, "I'm gonna really stay on that. And by the time that he told us, it was around $4 or $5.
I told him to sell, by the way.
Yeah,
I mean, I looked at the financials. This is pure garbage.
This is pure garbage. Yeah. So he could recoup $45,000 on your money. But diamond hands mentality, this is going to happen on that. And now it's trading at 86. It went down as low as like 76 cents as well. And this company, they get, when they're that low, they get a notice from the exchange to bring the price higher, either by reverse split or something. If not, they get eventually delisted and become over the counter, and after a while they really go bankrupt or go private. So there is a lot of these companies out there in the Nasdaq. From that 8,000 people publicly listed, like easily you can find 1,000 to 2,000 of these companies. So we got to be really, really careful on that.
Yeah. So market did close. I think as we're getting ready to onboard Dr. Reid to our amazing show, market did close. Let's go to our trading terminal and see how did we close the day. S&P 500 down about 32 basis point. Nasdaq closed the day green, but I mean, how low can it go? IWM about 41 basis point. Bitcoin still struggling. Now the new level seems to be at around 22,000. It's been lurking around 22,000 for the past few days. Dow another red day. Yields continue to go up. There is nowhere to hide, right? There is absolutely nowhere to hide. Bonds are selling off. Stocks are selling off. I mean, your question was that stimulus check worth it?
Yeah.
That $1,200, was it
so
worth
that was
it?
a lot of discussion that the way that the pandemic was handled wasn't really worth it. All of those quantitative easing and injecting money in the economy, and there was a lot of signals about the way that they're handling it. But I guess everything is very beautiful when you look at it in the past and very clear, but when you are actually in there, it's really not that easy.
Yeah. Santiago, just signal me whenever Dr. Reid is in the room so we can have him. Let's go to our calendar. No major earning tomorrow either. The only earning everyone's talking about is Adobe. I don't love Adobe's earning because it usually doesn't breach the expected move, so we don't sell off a lot or anything in that nature. So I don't think I'm gonna play with options. I did play DocuSign and it was really profitable. One of my better trades last week. But Adobe is one of those ones that I'll probably wait, see the result, and then take something, maybe a credit spread or a calendar spread, depending on what happens. So nothing really. We have to wait a couple of weeks till earnings season starts again, and that's when Ed is going crazy, and I'm going crazy. That's kind of our bread and butter.
Yeah.
FedEx had a huge rush. It went up by quite a lot today. If you could bring the chart, Andrew, FedEx, they talked about increasing their dividend.
Yeah, so it was a real big gap, up 15%, 14%, and closed near high of the day. So that's very, very interesting and very surprising. Still far from the highs. There's a mountain to climb to get into 320. But it was a very, very promising day for FedEx. Adobe about tomorrow. I never really traded during the day. It was really, really choppy. But anyways, are we ready for Dr. Reid?
No, it's not here yet.
Dr. Reid, if you're hearing us, if you're in the chat, we're waiting for you through the link that we sent to you. Dr. Reid says he's logged in.
Yeah, we're gonna figure it out. This is one of the things I told Dr. Reid. It's a live show, so we're probably gonna run into a little bit of issues. We thought we've mastered this since last week. We had Jason on, and it was pretty smooth.
Yeah, we'll figure it out. There's always a little bit of these things. I mean, you either have to have a very professional production like CNN or CNBC, or when you're having this YouTube.
I was watching CNBC yesterday, and again, there was a Zoom issue. Like a thing popped up, you're running out of 40 minutes time. It happened again yesterday.
Oh, it happened again yesterday?
I wanted to bring it to the show again and talk about it, but I'm like, it's old news. It's just like everyone's canceling their subscription. I think, Santiago, make sure that the password is included in that email. So, because with the link, he has to click on the password, or maybe send a new link if possible. Yeah, that's awesome. Give us a thumbs up for our producer Santiago. He's changing the cameras, changing the sound, doing all of his stuff all at the same time. as well as managing our guests. So kudos to him, and thanks for being patient. Luckily, we don't have we have tons of material, so we're not going to really run out of material. Adu, you want to talk about MicroStrategies?
Yeah. So MicroStrategy, MSTR, is this a company who really bet on cryptocurrency? The majority of their fund, the company's fund is actually, it's a business intelligence company, but is in Bitcoin. And Michael Saylor, the founder and CEO, who really bets very seriously on cryptocurrency, and he really wanted to push this toward $100,000, but he was not successful. And I've read that their average portfolio is 21,000. Below that, they're going to get a margin call.
So yeah, their head of treasury or their CFO said basically if the Bitcoin goes below 21,000, they're going to get a margin call. And recently, they reiterated that, and they said now the margin call is at about 17,000 because they just posted another 205 million in collateral. Obviously, they haven't sold the Bitcoin, but the unrealized loss on their Bitcoin position is about 1 billion because the average price is at around 30,000. And $1 billion unrealized loss on their Bitcoin position. I mean, we talk about ESG, and the G stand for governance. Talk about poor governance, you know, doing this with your shareholders' money. What is their market cap? I don't even think their market cap is like more than 20 billion. If you could check really quickly on Trading Terminal, that would be interesting.
You can go to Trading Terminal and you can look into that MSTR. I'm going to go do it right now. MicroStrategy, the market cap is actually 2.4 billion. So
their unrealized loss is at about 50%. Their unrealized loss on their Bitcoin position, which is a leveraged position, by the way, they've borrowed money, is about 50% of their market cap. I mean, talk about really like, you know, he was out there giving people advice to mortgage your house and put it in Bitcoin and borrow some more and put it into Bitcoin. Talk about poor governance, right? And what it does to like everyday hardworking people. This type of you know, pumping pretty much. This kind of shows their average price and cost of Bitcoin holding. Paper loss of nearly $1 billion.
So we have Dr. Reid, diamond hands in the executive team. Yeah, exactly. You know, having a diamond hand mentality and a volatile asset definitely can jeopardize the health of the company. So, you know, people who get in the whole funding of the corporation into a very volatile leverage product, they can.
The control room is telling me that Dr. Reid has joined us. Is that true?
Yes, that's correct.
Amazing. So, well, Santiago, please, Dr. Reid, welcome to the show. Sorry about the trouble, and thank you for your patience. We're so excited to have you on.
I can't hear Dr. Reid.
No. Who say it's Dr. Reid?
Oh, Dr. Reid is not in there?
Okay.
Sorry.
No,
you said he's ready. Okay. So email him again or message him.
But I don't have. If he can write me to me.
Yeah. In the same topic of poor corporate governance, we have poor production right now. The problems we're seeing.
All right, so diamond hand being the gamble. Dr. Reid says he's speaking right now through the link that we sent for him. Do you see him?
Yeah, this type of problems definitely happens. I'm sure the session will be totally worth it, and we can go over time, absolutely. Andrew over there is looking after what the issue is and what the problem we're facing.
Yeah, so Dr. Reid, we're waiting for that to connect. Somehow. Yes, Susan, thank you so much.
Yeah, and he recently tweeted in Bitcoin We Trust on June 13th, so yesterday at 8 in the morning. Definitely has a lot of overconfidence. I see a lot of similarity between him, Michael Saylor, and Adam Newman, the CEO of WeWork. Andrew.
Yeah. So email me email the again.
Yeah.
Susan saying Dr. Reid is worth the wait. I 100% agreed. definitely. We got about 200 people in the live right now, so definitely a lot of excitement, and this is like that climax in the show, you know, right before our guest shows up.
Good. Is there passport too?
No, it's not the passport, only the link.
Got it.
Alessandro is telling Andrew, your ABCD strategy has helped me a lot this week. You know, that's amazing. By the way, while we're waiting for Dr. Reid, this is a great time. If you're watching and you have questions, this is a great time to maybe start queuing your questions and send them in. So while I'm going through the chat, I can make sure all those questions get answered. Of course, you know, Dr. Reid has actually presented a really good presentation for us as well. Okay, so the thumbs up is in. Thank you. The wait is over. Dr. Reid, my sincere apology for the trouble. Welcome to the show. How are you?
No?
I can't hear either.
He disconnected again. I don't know.
He disconnected again?
Yeah, was blue, was with the audio, but now it's not.
Oh, Dr. Reid, we lost you again. Can you do it again? Oops.
I'll put Cathy.
You know, I always wanted to, you know, I always wanted to see that part in when they're making movies or in the news when they make mistakes and behind the scenes. I really like that.
Yeah, and you know, it is very stressful. And you know, for me, like this is our kind of first live show that we're doing. When you get distractions like this, it's very hard to stay focused and be professional. But I think we're doing great for a first time. For a background in finance, I think I'm doing a good job. Santiago is working really hard to get Dr. Reid connected. Hopefully.
Dr. Reid, you were connected and then you suddenly got disconnected. I mean, the last email, the link that we said, I don't know if you want to close your browser, all of the browsers maybe, and do it again. We would appreciate that. The last link that we emailed you. One thing that I wanted to mention that this is the fourth bear market that Dr. Reid is trading.
Yeah.
And he has a lot of experience. I have a lot of questions from him that to learn how to deal with this market volatility.
Yeah.
And as I mentioned, he's seen dot-com bubble, financial crisis in 2008, 2009, then the pandemic bear market, which was very short, and now this one, which potentially can be a multi-year bear market. And you know, we have to be prepared for that. I was thinking that these dips are going to get bought up, but now we're dealing with inflation out of control, and you know, with the reverse globalization that we have, we might very well be into a multi-year bear market.
Yeah, you know, when I was communicating with Dr. Reid about like possibility getting me on the show and the stuff he wants to talk about, Andrew, he was really kind of not inspired, but he was really you know, intrigued by your email that you send out, that it's a terrible time for investors but a great time for traders. And he really want to focus on that aspect of psychology and risk management, and you know, what it takes to be really profitable in a situation like this, in a scenario like this. So I'm definitely excited. This is my first time actually speaking with Dr. Reid. I know Mike has run multiple webinars with him, but I'm definitely excited to have him on the show. We are working in the background to get Dr. Reid connected. Currently, Andrew is speaking with our producer.
Dr. Reid, you know, we just can't get your sounds. I mean, it might be an issue from your microphone. I don't know if it's the same, using the same microphone or not. Yeah, it seems that you are connected, but your voice is not really coming through our system.
No, the link is not yet connected. It's like,
oh, so he's not even connected to our link? This is the last link that we emailed him? So can you email that link to me and see if I can connect to that link? Or send it in Slack so I can just give it a try.
Yeah, we can definitely. I mean, we're gonna try our hardest for the next few minutes to get this sorted out. But that being said, we can always have Dr. Reid back at a later date, at a later show. Again, tomorrow we have.
You have me? Yeah. Oh well.
Yeah, Andrew's connected, right?
And I
yeah.
Very much, but you are not on that. You are not in the live.
Okay, so to be honest with you, I don't know. I mean, buying the dip. All right, Ardi. not sure if Dr. Reid, I did try that link, unfortunately. What we can do is maybe potentially we can reschedule this. Yeah. I do apologize, Dr. Reid. I don't know exactly what happened, but what we can do is maybe we can reschedule it. I know your time is really, really valuable, so I do apologize for that. But it's just technical difficulties is happening time to time. For those of you who are staying with us, give us a thumbs up for this problem that we had.
And some emotional support. Ravi is in the chat. Ravi is saying, "Hey Ardi, Ravi, you posted a video on Twitter with my book. Forever grateful, man. If I've been able to add any value, really grateful. Thank you. Thank you for doing that." Ardi, call Ardi's phone and hold up the mic.
We can call and we can hold it.
We can do that. We can call Dr. Reid, and have him kind of on the speaker close to the mic.
We can do that. Dr. Reid, if you can email us your phone number, maybe we can call you and then we can have that through that.
Yeah, that's look at that. Whoever came up with that deserves a raise.
We're waiting for if you can email your phone number, we can just definitely
we'll do that. Since we already have like 200 people on the live, we definitely want to give a show. I'm actually really excited to hear what Dr. Reid has to say. He sent me the slide decks. It's phenomenal. So
there's a presentation as well.
There's a presentation as well. Yeah. So I can't wait. That's why we were so excited, and I told you definitely put that in the newsletter. Let's get as many people as involved. So that's a really good idea. If Dr. Reid, Andrew, if you could connect with Dr. Reid and have him close to your mic, it would be amazing. And then at the same time, I can monitor the chat and have a conversation with our members. Yes, Timmy, send your CV to Ardi at BearBullTraders.com. Okay. Santiago, I did receive the phone number, so yeah.
You want to give it a call?
Yeah, maybe Andrew, if you could give him a call. Make sure you have battery.
I don't have battery. Do you have battery?
Yeah, I have battery. Yeah. Yeah, I have battery. Yeah. Yeah. Feel free to use my phone. Put that on speaker. I have tons of battery. We're doing it. I can no longer now check the chat, so if you're saying something nice about me or mean about me, I can't see it because we're using my phone. But on a bright side, we're getting Dr. Reid connected. Yeah, I can hear it.
Hello, Andrew.
Hi, Dr. Reid. How are you?
Hey, I'm good. How are you?
I am good. Thank you so much. I'm really, really sorry for this situation. We should have probably looked at it earlier.
No problem. Yeah, we'll test it next time.
Yeah, so I'll bring this as close as possible. Dr. Reid, can you guys hear Dr. Reid really well? You want to introduce yourself quickly, Dr. Reid, so we test the quality too?
Check 1 2, test 1 2.
Yeah, perfect. So apparently the guys can hear you. So thank you so much, Dr. Reid. You've been working with us for almost, I think, 2 years, and we had the pleasure of working with you in the market, through monthly webinars and of course your private coaching and private mentorship for our traders. And you have a library of mini mastermind videos that our community have access to that. So I just want, on behalf of all members, thank you for your support, and it has been a really great pleasure working with you.
Well, the same here. I really appreciate you guys. As I mentioned the other day in an email to you, I really think of BearBullTraders as one of the premier education-focused trading groups on the web, if not the best. And you guys, your commitment to education without hype is just truly amazing.
Well, thank you so much. I really appreciate that. It's an honor to hear this from you. Ardi, is Dr. Reid having a presentation that you want to go over?
Yeah, absolutely. Dr. Reid, the floor is yours. As you're speaking, I'll make sure to have your slides up, and we'll make sure the YouTube are seeing the relevant slides and your talking points. We're really excited to have you on. And again, my sincerest apologies for the problems that we ran into. But we're glad to have you. Over 200 people are watching, so that's amazing.
Dr. Reid, just the first question that I think everyone wants to hear. We are in the bear market, and probably a lot of people for the first time. Can you tell us how the bear market is different from the normal market condition, and what traders should brace themselves, how they should brace themselves for this market volatility?
Yes. Thank you, Andrew. You guys are doing a great job helping people, setting expectations for people. Ardi, you're doing a really good analysis on the fundamentals, and you guys are extremely objective about all this. But the truth is that every bear market is different. Okay, the first one that I traded through was the .com crash, and that was a situation where that was my very first bear market, and I was actually a professional trader at the time, and I was scared. I didn't know what to expect, and just sort of learned to deal with it, day by day. And then the financial crisis was really a completely different experience. It felt like Wall Street was going up in flames, and that our whole economy could crash, and that was very serious. And then we had the COVID bear market, which was the shortest bear market in history. It lasted about 2 months. And now we have this slower grind here, and I can show you a chart. If you go to that first chart that I sent you on that PowerPoint,
yeah.
It gives a description of these. It shows the last kind of 4 bear markets and the volatility index. What the volatility index looked like. And I see it over there behind you. Yeah, there you go. Okay, so the bear markets have really been different. Okay, in their intensity and their duration, and the one that we're in right now barely even registers on the chart. Okay, we're in this little one on the far right here, and we're just kind of peeking into the fear zone. All right, we haven't really experienced much panic yet or much shock, and I think that it's a grinding bear market. It's different than really, it's kind of similar to the .com bear market in the sense that it doesn't have any extreme spikes. It's not a panic-driven bear market at this point yet, but it's a grindy, choppy bear market. And as you mentioned, Andrew, that's a difficult thing to deal with because it makes us want to get in the water. It makes us want to trade it. At the same time, it can fool us, and things are not exactly normal. Okay, so even though CNBC officially declared a bear market, today, right, this morning, because the S&P closed 20% down, below its peak. But if you were trading stocks like Roblox or something like that in 2021, Roblox peaked on November 22nd at $141, and it's now trading at 26. So your bear market, if you were trading those kind of stocks, that it probably started 7 months ago. And you've been dealing with maybe kind of a stealth bear market, or a bear market that has operated, in stages, taking down the most speculative stocks, and then gradually, the way bear markets work, in the end, there's no place to hide. Okay, but at first, people are hiding in the large caps. They're hiding in Apple, but in the end, you can't really hide from a bear market. And Apple just entered its 20% decline in early May. Okay, so Apple was a safe haven for a while. It's no longer a safe haven. So when markets change character, when you get a bear market, it happens in stages, and some stocks retain their bull market charm for much longer than others. So it really matters what you choose to trade. And as Andrew mentioned earlier, in his trading today on the SQQ and TQQ, that trading individual stocks in a bear market can be more challenging. They can have, this extra element of drama that's going on based on the fundamentals of that company, really. And you may end up dealing with a lot more volatility than you bargained for, a very different type of volatility than that stock may have exhibited when it was in its bull phase, okay? And trading something like TQQ or SQQ, SQQQ, 3 Qs, may make things a little smoother for you because those are averages. It's an average, and it's an ETF, and so that's something to consider. The volatility index, though, which is this VIX, is one measure of investor mood, and what it does is called the fear index, and it measures the implied volatility of SPX options, okay? And the higher the volatility, the greater the fear. And currently it's in the 30s, which is elevated. It means it's in that yellow zone, and it means that the market has a fever. But it doesn't have COVID, okay? The market does not have COVID right now. There is no panic, but there's just more chop. That's really what we're dealing with now, all right?
Yeah, I'm bringing this chart, yeah.
Yeah, if we go to the next slide, the next slide is about, let's go to that. The next slide is about the ATR in the market, the average true range in the market. Let's see if we can get that slide up.
Adi, go to ATR. Do you have the ATR of that? Oh yeah, that's it. Yeah. Keep it here.
Yeah, so it's slide number 2 in that PowerPoint. There you go. Okay. So I like, the VIX is implied volatility. It's the estimate of volatility over the next 30 days based on a bunch of options. Okay? But the average true range is the volatility that we experience every day as traders. Every single day. It's not implied, it's real. It's the exact environment that we're in. And I think what you can see from this, the ATR is that yellow line, the gold line plotted down below. We're at an all-time extreme of average true range, of actual volatility, okay? And it is far higher than the historical norm during the last bull phase, which was, maybe around 8 here for the Qs. We're up at 21, okay? So we have more volatility now, actually, than we did during the pandemic, during the bear phase of the pandemic, okay? So that volatility was helped during the, while we had our bull market, and it was actually kind of subsided, during the pandemic bull. But when the pandemic bull began to fade, you can see that the average true range, the volatility really started to go up. And we're still in the midst of that right now, okay? And you can see that the bars, if you look at this chart and look at the bars, they're quite a bit wider than the bars. Look all the way back to the left, but the bars were in 2019, okay?
Yeah.
Now, volatility cuts both ways. It can be very good for traders, but basically it's good for traders if the VIX is low. But a high ATR and a high VIX at the same time reinforce some problematic market behaviors. So let's go to the next slide here, and we'll talk about what to expect when I say, what kind of problematic behaviors are we really talking about here? And I took a little screenshot of the Qs this morning as I was preparing for this, and that'll be the third slide. Ardi, if we could pull.
Yeah, it's coming, Dr. Reid. There's around 10-15 seconds delay, so when we change it, what you see. Yeah.
In case somebody says something bad.
Yeah, exactly. I think that's the whole purpose.
Okay. So anyway, this is the Qs this morning, all right? And I was just looking for an example to show everybody, like, what are we talking about what's really different in the market. And we've already probably become kind of accustomed to it already because we've had it for a number of months now. But, we had a bad PPI print this morning, and, the market goes down at the open, and it sells off for like 16 minutes, okay? And then then there's a bad consumer sentiment report, that happens around 8 o'clock actually, and the market goes up. Okay, so the market goes down on bad news, then it goes up on bad news, then it sells off after the rally on the bad news, and looks like it's falling apart, and then it does a little U-turn, kind of a gotcha trade there, a real fast random whipsaw U-turn, and starts to rally. So this is what I mean by bad behavior, okay? This is the kind of stuff that we're going to have to deal with, and we're dealing with now every single day, all right? And if you're, what Andrew said this morning, or in his earlier remarks, is that, if you know how he traded today, he started out long on the Qs, okay? And he stopped out, okay? He had a long trade in TQQ, and he stopped out, and what he did then is he went to the SQQQ, which was maybe for the first time, I think you said, that he hadn't really traded that before. And he had a really wonderful trade in that, okay? So what does that represent? That represents flexibility, adaptability. And that's got to be the number one thing for you, all of us, to think about and consider. And the other aspect of that is we need to stop asking why, okay? Don't ask, why is the market doing X, Y, Z? Now let's go to that next slide. We don't want to ask why the market is doing anything. We want to kind of dumb ourselves down and simply observe and accept whatever the market is doing right now. The market is always right, and our job is to simply follow it, okay? And Andrew gave a really good example of that this morning, and if you can do that, if you can turn on a dime like he did, you're going to be just fine, because there's beautiful trends that happen. And in fact, one of the things to expect in this time, and we could go for a number of more months before we get to Ardi's targets. Expect multiple trends intraday, up and down and back up, or down and up and back down. You have to expect that, okay? It's almost like having 3 or 4 seasons act into one day. You want to expect that, and many of them are going to be tradable. They're going to be tradable moves if you can be nimble and adaptive, and not be thinking about trends so much, and think more about mean reversion, which is what the guys were talking about earlier. Okay, this is a period. This is the reign of mean reversion. It's all about mean reversion right now. Okay, so there's going to be random price action. There's going to be a lot of chop, and you're not going to know why anything is happening. You're going to be confused, but that's normal. And in fact, just try not to think about it. Try not to overthink anything. All right? There's going to be paradoxical price action versus the news. In other words, bad news, the market might go up. Good news, the market might go down. And when we get that call from the Fed tomorrow, let's say the Fed goes 75 basis points, or let's say it goes a full point, or what if it raises rates 2 points, okay? The market may go down or it may go up, and we don't know, okay? We can't predict whether there's going to be a paradoxical reaction or a kind of a normal reaction, but we need to be prepared for either one. All right? There's going to be lack of follow-through on your standard setups. Rallies are going to fail before they really get going. They might get you thinking that this is a nice little move, and you want to, catch the first pullback, or you want to pause, you want to catch the B leg of something, and it just doesn't go. Okay? You need to be prepared for lack of follow-through, and especially the failure of breakouts and breakdowns. And So in a bear market, you might think, yeah, of course, breakouts are going to fail. But guess what? Breakdowns fail just as often, right? And in fact, one of the games, or probably one of the biggest games that they play, meaning, sort of algos and stuff, that they play are trapping eager shorts, trapping shorts that are selling short on a breakdown. Okay, you'll find that is not an easy trade to do. You want to, generally speaking, you want to go long at the lowest possible spot and sell short at the highest possible spot. In other words, you want to try to trade at extremes, which we'll talk about in a minute. Okay, there's going to be sudden reversals, and one of the places that you're going to experience these sudden reversals are at the spots where you expect the market to either go up or down, and you can be quite surprised there at these sudden reversals. It's like, what the heck? What is happening here? Why is it going up when it should be going down? And then extreme mean reversion. And what I mean by that is you'll find very strong rallies, for instance, that happen out of the blue. And then the pullbacks on those rallies completely retrace the rally, okay? Without any way of really getting out except just stopping yourself out. So if you were thinking that that rally is going to continue and you're sort of buying high, expecting higher, you can really get hurt if you don't use a stop. Okay, you need to be prepared for a kind of saw wave. It's not a sine wave; it's a saw wave. In other words, it's a sharp point that goes up and it comes down and makes another sharp point at the bottom. All right. And then, just when you're getting used to this extreme movement, then the market is going to put in long periods of chop. And it's going to do nothing for hours on end. And you're going to be expecting, because you've been tuned to the volatility and you're starting to feel, like, okay, I'm getting the rhythm of this thing. And you're expecting volatility, and all of a sudden volatility dies out for 2 or 3 hours. And when that happens, you can get caught in the chop. You can get caught expecting something to happen, expecting a trend to start, and nothing happens. And you get chopped up in chop. Okay, so you need to be really careful about, yes, exactly. You need to be really careful about that too. So these are some of the things that you're going to be encountering in this type of bear market. The one we have right now, which is not extreme yet, okay? It's just a grinding bear market. And we don't want to grind away our profit. So let's go to the next slide. And the next slide is going to talk about how you might react in this environment, which means what are you going to be thinking and feeling while all this is happening? And this is where our psychology comes in, and we have to really be careful. We have to practice really good, mental hygiene, psychological hygiene right now, because this type of market can instill a lot of doubt and confusion because nothing really makes sense. And if you're reading CNBC or you're reading Bloomberg like Andrew does and I do, and you're reading the commentators that really do understand the market, what they're really saying right now, and you can hear that in Ardi's analysis before the show about the possible range of the S&P. Nobody knows right now. Nobody knows. Are we going to have a recession or not? Is that war in Ukraine ever going to be over or not? And the level of uncertainty is extreme right now, and it's reflected in the market. And if you are experiencing doubt and confusion, that would be normal. And you just need to know, okay, there's a lot that we don't understand, and we have to embrace uncertainty on a whole nother level now. Okay, on a whole nother level in terms of causality and the fact that we don't know why anything is happening, but our job is just to trade what's happening, but we don't know why. Okay, this can lead to over trading. this can lead to, because we have this extra volatility that Andrew was talking about, which can be good at times. When the market's moving, a lot of us, are looking at it like a bright, shiny object, and it's going up, and we want to be involved, or it's down, and we want to be involved, or we should be involved. And it's very easy to fall into overtrading, extremely easy. So that's probably the most important thing to watch out for. And I want you to do as much as you can to brakes on in terms of the number of trades you take per day. Okay, that's going to be huge. The other thing that's going to happen is, because we're confused and because we don't know what's going on, because the market is moving quickly, we're going to be improvising and guessing about what's going to happen next. And that's just a natural human tendency. All right, it's like somebody playing, with 3 walnut shells, putting a pea under 3 walnut shells and moving those walnut shells around. We like guessing. We like to guess and be right. Well, try not to do that in your trading. Okay, this is a time to rededicate yourself to your trading plan, to your trade book, so that you have to inhibit yourself even more than normal, so that you do less, not more. You have to do less, not more, and be very careful chasing, because as soon as the market stops to let you in, it's kind of like salivating that it has you, okay? And you're very likely to be buying the top or selling the bottom because it stopped to let you in, okay? It's kind of like a bad fairy tale, where this is how it traps you, all right? And so don't be playing around with that momentum unless you're very, keep your finger on the mouse, okay, so that you don't get caught and trapped in any kind of greed situation. The other thing is, there's a tendency in this kind of market to increase our position size. Why? Because we probably just had a larger than expected loss. And for men in particular, not so much for women traders, but for men traders, we don't like to take a loss. We want to make it back, and we kind of get into a revenge mode. All right, and when we're in revenge mode, we increase our size, and we think, well, I'm going to be right now. I was wrong then, but so the opposite must be true, and I'm going to increase my position size, whether you're adding to a loser or you're just taking a fresh trade, but you're taking it twice as large because you just had a bigger than expected loss. You just had to stop out. You don't feel good about it. That is really going in the wrong direction. Okay, you don't want to put on more risk in this environment. You want to put on less risk. All right. You can also really experience extreme FOMO. If you have a tendency for FOMO, fear of missing out, the fear of missing out can become the pain of missing out, FOMO, very quickly in this market, because the moves can be extreme, up or down, and you're going to feel like you're missing out. And it's like, God, that's the one move that the market's making today, and I'm not in it, and I should get in it. That is going to be a trap for you. It's going to be a psychologically activating trap, and it won't stay. So be careful about that, and just, tie yourself to the mast, like Odysseus did, and just, stick your hands, under your legs, or duct tape them to the desk, and don't press your mouse, and do as little as possible. Because, and I'll tell you why in a minute, okay? You need to trade as little as possible right now. The other thing you might be tempted to do is trade without stops, because the market is so volatile, and you think to yourself, well, it's just going to hit my stop in a second, so I should just not use stops and, trade on the fly and improvise it and let it move around, give it some breathing room and all that. But that's not a good idea right now, okay, because the volatility is too great. And you're very likely to get to a point where loss is too big to take. And if that loss is too big to take, you're going to be a deer in the headlights, and you're not going to take it. And honestly, as soon as the market knows that, sees enough deers in the headlight, they just take it, really far against you. It can be extremely painful, and and you hit your max loss if you have a max loss, and if you don't have a max loss, you hit your uncle point. And that's a terrible place. You don't want to be hitting that at any time. And the last thing is moving your stops, okay? Moving your stops are just outright adding to losers. Moving your stops is like bargaining with the market. You're trying, well, I'll give it a little more room, give it a little more room, and adding to losers is bargaining with the market. It's like, well, I'm sure I'm right. I know where it's going. I'll just add a little bit more, and I'll make a really big profit in the end, So it's just this fantasy trading. It's gambling, really. And okay? So these are some of the, it's like 8 or so examples of the kinds of challenges we face. Now, we face these every day in a normal market, okay? But they're exaggerated. They're more likely to affect us, even if we're not, kind of a wild and crazy trader, okay? Even if we're relatively conservative, we're likely to fall into these things because of the extra volatility, all right? So you got to be careful. So my final slide is really just about, okay, what do we need to do? Okay, what are the tactics and strategies we need to apply to prevent this stuff? Okay, what's the roadmap that we should be doing for ourselves? And it's really it's our own applying discipline to our own trading that is the most important thing right now. Okay, so number one, and this is I've got very clear evidence of these things from the clients I'm coaching right now. Okay, reduce position size. And I would say generally a rule of thumb for this is reduce it by 50%. 50%. Reduce your R by 50%. Because basically we have twice the volatility, so it makes sense, okay? Twice the volatility, reduce your R by 50%. The other, number 2 is trade the obvious. And this is what I was mentioning before. Don't overtrade. Trade the obvious. And what I mean by obvious is bigger patterns. These are the patterns you're going to see after the market is closed and you're looking back on the day and you're going to say, wow, why did I take that trend line break? Why didn't I short that high of the day? Why didn't I buy that, that IB low? Why didn't I, get in around that point of control? What about that VWAP short, And you're going to see it in hindsight. But what I want you to practice is practice seeing the obvious as it's occurring. And these are going to be bigger patterns. The market's going to give you tunnel vision. It's going to suck you into the price action of every single bar. You want to pull back from that. Okay? Pull back from that. And try to see patterns that are 30 minutes to an hour long. 30 minutes to an hour. Those are the patterns that are going to make you money. Those are the patterns that are going to be the most reliable, okay? Those are going to be the ones that are most obvious to you when the market is closed and you look back on the day. Those are the ones you want to find in real time, okay? The other thing, trade 1 or 2 familiar names or trade an index, like Andrew was saying. And I recommend trade one stock. Okay, if that kind of bores you, then you can trade one sort of in-play stock and one standard stock. Like say it's AMD. You get familiar with AMD or NVIDIA or Apple or something like that. And that's your main trader. And then you can trade, you could trade BABA or whatever seems to be in play. But limit yourself to 2 names so you know what you're doing and you're focused on process, not outcome. And you get more and more familiar with the actual patterns of your favorite stock, okay, whatever that is, and really get to know it. It can be a real friend for you during this bear market, okay? You need to have a stock that you understand, that you can go to every day and make a good trade on. And if you watch NVIDIA or AMD or Tesla, you'll see that they give really nice trades every day. Okay, they do. They're operating well, and you just need to stick with them and be patient. Setups, all right. Resist FOMO and chasing. All right, you can just realize that those are the that's not the road you want to go down. Okay, and if you can name it, you won't do it. Okay, just realize that you don't want to do that, and what you want to do instead is reduce the number of trades per day. Okay, the guys that I'm coaching now that are doing the best are trading 2 to 3 times a day, 2 to 3 trades a day, and they're waiting for that right moment. Now it's going to be a little boring probably for some of you, but how many trades does Andrew take in a day? Okay, it's like he took 2 today, and maybe he took another one later. But make your trades count, make them matter, and wait for the quality, not the quantity. Okay, you want to focus on the quality, and that could be around the open, or it could be 90 minutes later when the bars start to get smaller. It could be when it hits the opening, an opening range, 1 hour opening range, or it could be, all sorts of things. So for quality, okay, look for patterns, and wait for confluence, which means wait for 3 or 4. We have 3 or 4 reasons to get to enter your trade. Now, in looking at Andrew's trade, in the opening range, he was he had an idea, okay, and he stopped out. His idea was wrong, and he stopped out. One reason for getting in a trade is that your idea, which was based on a number of different factors, is wrong. If your idea is wrong, then the opposite idea may well be right. We don't know for sure, but it may well be right. It's worth trying. And that's the flexibility that we need to have right now in this market, because we just don't know. We take our shot, we use our stop, and then we reevaluate. And if you see a number of things that are that you see the failure of a bearish pattern, the failure of a bearish pattern is bullish. Failure of a bullish pattern is bearish, and he saw the failure of a bullish pattern. Okay, he stopped out and went bearish. So we've got to be flexible, and we've got to understand whether an important pattern is failing or not, and develop 3 or 4 reasons to trade. That could be, CAM level, it could be the VWAP, it could be some levels from yesterday's, price action, a couple of days ago, and look for confluence. Confluence trades are going to be your best trades right now. And the last thing is something I've noticed, which is to trade the extremes and avoid the middle. Because when we have this extreme mean reversion like I was talking about, that means price action is going from one extreme to the other. Okay, it's not just going from, like say, S1 to R1. It's going from, S4 or S5 to R4 or S5, or S6 to R6. And it's extreme. So be careful about trading in the middle. The market may be a little freight train just going to run you over if you're thinking that, say, it's going to stop at the VWAP. A lot of times it's not stopping at the VWAP. It's not stopping in the middle, and it's going to extremes. So be cognizant of that, and don't stand in front of a moving train. Okay, and so that's and be flexible. Just want to underscore that. Be flexible and don't ask why. Okay, just follow the market. The market is your master, and we need to follow it. All right, that's what I have. That's all I have right now.
Wow, amazing, Dr. Reid. Thank you so much. Well, I'm surprised that you're closely watching my trades, so it puts a little bit of a pressure on me right now. From now on, that you're so closely monitoring my trades. Exactly all the trades that you did, you mentioned this morning. I loved it. Thank you so much. There was such an amazing tips in there. One of the things that I myself struggled a lot with was, getting a confirmation bias. Like the news come in and say, oh, well, wait a minute, they didn't increase the interest rate. It should go up, but it shouldn't. It's going down. It's completely, like a deer in the headlights. You just froze with the big position. And I've had those bad days in the past. And big losses, very, very big losses. So I'm happy that you actually mentioned that again. I saw a lot of really great comments in the chat that I see, a lot of appreciation about what you're doing for the community. And Richard, for example, he says each Dr. Reid webinar give you a better perspective. Love him. Well, thank you so much for that. Ardi, what do you think?
It was amazing, Dr. Reid. Like, it was definitely worth the wait. I'm sure if we stay and want to answer the questions, we're going to be here all day. So I'm going to keep it short. But I had one question in your slide, and I think it was really interesting with the weeks off, fast weeks spike, and the duration of the bear market. Do you think there's a little bit of a kind of a correlation or relationship between how fast we get that VIX to 40 or 50 and that capitulation to happen and the length of the bear market, or not really?
Dr. Reid, I don't know if you still have us or not. I mean, the question is, if we get a huge panic in the market, is it gonna shorten the duration of the bear market, or no?
Yeah, actually, I think it will. The pros are waiting for capitulation, and they have a formula for that. And we'll know it. We'll know it when it happens, but they're all waiting for a capitulation. They're waiting for retail capitulation. If you look at that, go back to that first slide about the VIX. They're waiting for the VIX to get up well above 40, okay? We're just sort of hanging around in that 30 to 40 zone right now, and they're waiting for a spike in the VIX. They're waiting for some panic, and it may or may not happen, but if it doesn't happen, we'll have a grind down. If it does happen, maybe tomorrow, because of the Fed doing something unexpected, a big spike above that red line is going to be helpful. Because what we want, this is kind of like a fever, and we want the fever to get worse and then break. I did send Andrew a chart, kind of where I expected the Qs to go and the time frame, and it is lower, but it is, and he published that, I think, in one of the daily newsletters. But I don't have a crystal ball, so we could get to that. If my target is right, we could get there. I was thinking we might get months or more, but we could get there in 6 weeks or 6 days.
Yeah, 100%. Dr. Reid, one thing is that this bear market is really, being driven by inflation and interest rates, and especially inflation is impacting all the profit margins. I don't know if we get, for example, one Black Friday that the capitulation happens on the market, there would be a lot of wealth to be destroyed, but is it really helping on the pandemic, on the inflation side, and on the macroeconomic? I'm trying to wonder if this is going to be a really short bear market. Are we going to get inflation under control or not? It seems that we need time to get over the inflation. And it seems to me that it can be a multi-year bear market just because inflation has to come down slowly. It's not going to happen overnight.
Well, when you think about the last bear market was 2 months long. Yeah. How long did it take us to get over the pandemic?
Yes, 2 years almost. 2 years, yeah. That's correct. Yeah, you're right, 100%.
So we don't really know. It's like the market discounts the future. Okay, the market's already worried about the next recession. Okay, and the faster it prices in, the worst. What happened with the pandemic bear market is it priced in the worst possible outcome in 2 months.
Yep.
Very quickly. And at that point, it was all priced in, and people said, well, this is the worst it could get, so we might as well buy the darn thing. And if we get a real strong push down because the Fed raises interest rates by 2 points tomorrow or something like that, I would buy that dip.
Oh, that's a very interesting point. Yeah, that's really, really interesting perspective. Thank you. Well, that's the experience and knowledge from you. I learned that big thing.
Okay.
Is there? I don't really see any specific questions right now in the chat. I don't know how much time you have, Dr. Reid. I don't want to really get some more time. I mean, if anyone is interested to work directly with Dr. Reid, or if you want to have a chat with him, you can reach out to him directly. Dr. Reid, what was the name of the website that people can come and contact you?
It's daytradingpsychology.com.
Daytradingpsychology.com. I make sure that put the link in the chat as well. Daytradingpsychology.com.
What a great domain, by the way.
It's amazing.
Yeah,
Daytradingpsychology domain .com. That's just amazing. So if anyone is interested in working in, Dr. Reid has a lot of resources on his website. There are mastermind courses and of course coaching that Dr. Reid is doing with traders for a very long time. Dr. Reid, generously accepted to do one-to-one coaching with any of our BearBull Trader members who sign up for 1 year elite annual membership, which was completely caught me by surprise. That was a very, very generous offer by you, Dr. Reid. Thank you so much. And I encourage people to look into that option as well.
Very happy to help you guys.
Thank you so much. So, Dr. Reid, Greg is asking, can these slides be available in the room? Is it possible? Are you allowing us to make it a PDF and maybe members can use that?
Sure, absolutely.
Oh, perfect. Well, thank you so much. I really appreciate that. And, I cannot, this is probably one of the longest and most watched live shows that we're having right now with people. And I really, really appreciate that, your time. And sorry about the technical difficulty from our side.
No problem. Very happy to be with you today, and look forward to some webinars at BBT.
Thank you. Have a good evening, and I'll talk to you soon.
Okay.
Bye.
Bye-bye, guys.
Oh, perfect. Well, thank you so much, guys. Ardi, great job on showing all the slides, and fantastic, really. I just couldn't, and I must say a lot of those mistakes, I've done that, especially on my swing trading part. Some of you know about those. It's just amazing that, the confirmation bias, getting into a trade. And I love that. I really, really appreciate that.
Yeah, it was amazing. Like, we should do a live, just kind of recap everything we went through today. Like, a lot of amazing information. A lot of the stuff that, we always need reminders, like your position size. Like, for those of you who were in the chat room, I had one trade today, right? And that was the Tesla puts that I sold yesterday, which I covered today, and I showed that, a few $100, not a lot, but again, reduce my position sizing, that 50%, right, that Dr. Reid was talking about. These are important, right? And I stick by them, and that's kind of my goal. But every trader needs to stick by them. And wow, what a great session. A special thank you to everyone that tuned in and really stick with us through all the difficulties that we got going on. This is our second time having a live show, a live guest on the show. So there's going to be little issues. Be patient with us. Be patient with our producer. He's doing amazing. He's working extra hard. So, thank you for, staying in the show and continue watching the show. Andrew, how many people are in the room?
So we have about 200 people watching, guys. Thank you so much. Give us a thumbs up if you enjoyed listening to Dr. Reid, and sorry about the technical difficulties. Kind of those of you who know BearBull Traders and us for a long time, the nature of laid back that we have. We do our best, but at the same time, we are not CNBC. We don't want to be CNN or Fox News business or something like that. It's just we want to be really cool back and cool and laid back. Yeah.
I want to go on CNBC one day.
No, I mean, we don't want to be channel that professional, like ads in between and stuff. So
I want to go on CNBC and cry.
They say it's not the bottom until somebody cries on CNBC.
Yeah, exactly. That's my goal, one day to be on CNBC. So a little bit of preview of tomorrow's show. We have Jeremy on the show. He's been member since February. He's been our member in BBT since February. He's been consistent. Initially he was trading options, but now he's trading equities, you know, taking a little bit of gem from Thor, a little bit of gem from Jared, a little bit of gem from myself, and he's really building his trade book, and he's been consistent for the past, I think, 4 or 5 months. He shared with me his results, so we're going to talk about that tomorrow as well. So definitely join us tomorrow, right 30 minutes prior to close, so 3:30 Eastern time or 12:30 Pacific Central time, and you know, we're gonna have a good time. We're gonna bring Jeremy on. Hopefully, no issues. We'll run some tests to make sure we don't have any issues. But it's gonna be an amazing time. And then Thursday, Andrew, I have dentist appointment again, so we'll have profit of profit in the show.
Yeah, Brian is coming on Thursday. That's totally fine. Thank you so much, and we're gonna looking forward to have a chat with Jeremy. Jeremy is tomorrow.
Jeremy is coming tomorrow. Yeah. Andrew, if you could put maybe in the chat the link to maybe your newsletter and my newsletter for anybody who's interested in you know, the slides, the model that I shared, things of that nature. The newsletter will be sent out in a couple of hours, so you can get this information.
Yeah, I'm gonna find.
And then for our BBT members, I'll post Dr. Reid's slides as a PDF into the room drive in the chat room. So if you're not part of the chat room and you're tuned in, here's a little bit of a good excuse to kind of join us, maybe at least for a week, and get the slides to that.
Yeah, I posted the link to your newsletter for those of you who want to be in touch with Ardi. And for those of you who want to be part of BearBullTraders, you can go and enter your email maybe in the link that I'm sending here. You automatically would go into our email list.
I'm definitely waiting for bear market to end and bull market to start, because I lost the bet to Carlos and I'm growing my beard, and it's really frustrating. So can't wait to shave.
So hopefully we get out of this bear market, and I mean, everybody's happier when the market is making all-time highs. So looking forward to that.
Exactly. Well, all right. That brings us to the end of this show. Another closing bell. Thank you so much for your participation. You know, as you guys give us more feedback, we'll make this show better. Our goal is 100,000 subscribers by year end. So, you know, if you haven't subscribed, definitely do so right now. It will mean the world to us. And we'll see you tomorrow featuring Jeremy. Thank you.
Yeah, thank you so much, guys, and looking forward to chat with you tomorrow morning in the chat. Brian is having a webinar in the afternoon, and so at 8 p.m. in the evening, I would say. So I'm going to be there. Peter would be there, so it's going to be amazing. Thank you so much, guys.
Awesome.
Bye.
See you later. Thank you.